Good morning, everyone. Troy Eckard with Eckard Land and Acquisition in Allen, Texas. Today is November 29th, and I just thought I'd give you a quick market update. Friday was quite a spectacular day with regards to commodity prices. Oil dropped a little over 13% for a barrel of oil. Gas prices stayed pretty robust, around $5.25 per MCF in gas. This morning, it looks like the market is still not quite sure whether it's going to go up or down, but what I want you to think about is the fundamentals of where we're at. We have a brand new variant called the Omicron, which comes out of South Africa, and apparently that's got everybody pretty concerned about a possible resurgence of COVID-19. But in reality, when you look at the details, it sounds like it's a very mild mutated variant with very little effects beyond a Delta variant. I'm not a medical doctor, but from the data that I've read, it seems like it's more panic than it is reality. It does, however, shake and rattle the markets. Now remember, we're on the 29th of November. Traders and those that are buying physical barrels of oil are having to take those contracts in kind today and tomorrow to meet their end users. Typically speaking, we'll end up with a pretty robust last 2 days of the month. One of the things I looked at on Friday, it appeared that there was a great deal of repositioning of option contracts and futures contracts as a result of everyone trying to take profits, get out before the market collapsed, and of course, trying to avoid the short selling pressure to the downside. Today, it looks to me like we have more of the same. We may not end up the month over $70 a barrel. It looks like this morning's pressure is still kind of in a downward trajectory. But I always go off the fundamentals, so I'm not a day trader. And the way I look at it is nothing has changed fundamentally from 2 weeks ago. Even the new variant is not going to affect the condition that we're in the marketplace today. We have a oil and gas market that's deprived of investment capital to help us drill more wells, put in more pipelines, and add more supply to the market. We do have an increase in demand. The EIA is still projecting somewhere around 100 plus million barrels per day by next year. That's up 3 to 4 million barrels from today's consumption. So from my standpoint, on a Monday morning, November the 29th, we've got a short-term bridge of prices settling back. I think we're pretty safe above $65 a barrel. I still feel today, looking at the conditions, even with this new variant, we still have a very strong chance of ending the year over $80 per barrel for West Texas Intermediate pricing. And it's all about traders deciding how much oil is available to meet those end users' contracts and the supply that they're all battling to try to control with contracts. So for the next week to 10 days, I suspect we'll see some downward pressure. I believe the fundamentals will kick in around the middle of December, and we still end up somewhere between $75 and $85 a barrel. As far as gas goes, we're still seeing a fairly mild winter, at least most of the Southwest and the Midwest. It's very warm here in Texas compared to normal. I suspect this is going to be a weather-driven price, but at the same time, this morning's price was $4.88 per thousand cubic feet on Henry Hub pricing. That tells me we're still very, very strong and very bullish on natural gas. Remember, our financial models and what we're using are based on prices around the $3.50 model, as well as the $65 per barrel price. So from our perspective, looking at the market, we're still way ahead of where we thought we'd be. We're very happy and comfortable with the prices. We suspect this is more market vacillation, and that should all come to settle over the next 30 to 45 days. Troy Eckard with Eckard Land and Acquisition. Thanks for listening in.